Are you heard about FHSS Scheme? I want to share something that could make your first home dream a little easier to reach. FHSS Scheme, First Home Super Saver Scheme, and it is one of the smartest ways to save your deposit faster. FHSS Scheme lets you save money for your first home through your superannuation account. You're right, which you normally use for the retirement. Super contributions are taxed at a lower rate than your regular income. So, more of your money goes towards your savings. That means your deposit can grow faster. Here is how it works. You put extra money into your super. This can be before tax contribution like salary sacrifice or after tax contribution. That money stays in your super where it earns in investment returns as well. When you are ready to buy your first home, you can apply to withdraw that money plus earnings to use as part of your first home deposit. Now, here is something very important to understand. The contribution limits. You can contribute up to $15,000 per financial year towards FHSS scheme. That's not the total super you contribute. It is the amount that counts specifically towards that scheme. Over time, you can save up to maximum of $50,000 through this method, 50. So if you are putting away $15,000 each year, it would take around 3 to 4 years to reach the full capacity of $50,000. Also remember, if you are buying with a partner, they can also do the same. That's up to $100,000 combined for a couple. Let me show you how this scheme can actually save your money on tax with a real world example. Let's say you earn $120,000 per year. If you decided to contribute $15,000 into your super under the FHSS scheme, that money goes into your super account and get taxed at just 15%, which is the super tax rate. 15% of 15,000, that is 2,250 tax you need to pay. Now compare that to what you are paying if you took that 15,000 as in a normal income. On a 120,000 salary, your marginal tax rate will be 37% plus 2% Medicare. That means 39% in total. 39% of 15,000. That means you are paying around $5,850 for that amount. Tax saved, $3,600 for that 15,000. That means by using the FHSS scheme, you are saving around $3,600 in just tax, putting that 15,000 into super, instead of spending that money in a regular bank account. Plus, that money is invested and growing, so you end up with and more in your deposit. When you are ready to buy, who can use this? It's a good question. The FHS scheme is great for and only used for the first home buyers, people who plan to live in that home, not just use as an investors. Anyone who hasn't owned a property in Australia before. There are benefits and things to watch out as well. The benefits: tax savings, more money in your pocket, encourage regular disciplined savings, funds grow through super investment. But a few things to keep in mind. You can't access the money whenever you want. It's locked in until you meet the withdrawal conditions. There is a bit of paperwork. You need to apply to the ATO to release that fund and follow the timeline carefully. That's where someone like me can help guide through this process. So if you are saving your first home, don't overlook to First Home Super Saver Scheme. It could give your deposit a serious boost. If you would like to help with your mortgage plans or want to make sure you are on the right track, feel free to reach out to us. I'm happy to help. General disclaimer: this is a general information only and not personal financial advice. For tailored advice, please speak to a licensed financial consultant or a tax advisor. Please like, share, and drop your questions in the comment. And let's get you one step closer to your new home dream. Thank you.